To improve your knowledge of the markets, focus on three things: opening bell, closing bell, and the bell icon.
Welcome friends to this new video on the markets. But before that, wishing you and your family a very happy, healthy and prosperous new year. It's been some time since I made the last video. Going forward, you will get access to learning videos as well on technicals, fundamentals, options and other interesting topics. The year 2020 has been a year that will always be remembered for the major events that took place. On one side, since the outbreak of the unfortunate pandemic that still continues to affect the world, while on the other side, the global markets have been hitting record highs. This is what makes the markets what they are, always unpredictable. Just to share a few highlights of the past year, we witnessed a historic rally in many markets from the low of March, with central banks and governments across the world pumping trillions of dollars to sustain the global economy from the pandemic shock. Further, positive news triggers of declining infection rates and development of vaccines at the fastest pace in human history also helped. Among latest news triggers, US President Donald Trump signed a $900 billion coronavirus relief bill. UK became the first country to approve the use of the vaccine developed by AstraZeneca and Oxford University. And UK also exited the European Union after the trade accord was ratified. Coming back to the markets, US markets witnessed a dream run with all major indices hitting record highs. Dow Jones trading at record levels, 30,606, up 6.89% for the year. S&P 500 was up 16% year on year, whereas Nasdaq was up 42.87%, its best yearly gains since 2009. On the European market front, it was a mixed bag of performance. Germany's benchmark index, DAX, hit a record high of 13,903, gaining 3.78% year on year. On the other hand, France's CAC 40 was down 8.15% this year, while Britain's FTSE 100 lost 15.24% this year, its worst loss since 2008. And the benchmark European stocks index was also down 5.35% last year. Amongst other markets, China's Shanghai Composite was up 12.6% in 2020. Japan's Nikkei was up 16%. India's Nifty was up 14.66% for the year, and the Sensex gained 15.45% in the year. On the commodities and currency front, the bullion pack had a great year on the back of inflationary concerns, with the global financial system flush with funds. London gold in dollar terms was at 1901 per troy ounce, with nearly 25% yearly gains. London silver was up 48% for the year at $26.52 per troy ounce, its best yearly gains in a decade. On the other hand, NYMEX crude was down 20% for the year, trading around $48.5 per barrel. Supply glut coupled with fears of revival of the global economy put pressure on crude oil prices. Talking about the rupee continues to trade sideways against the dollar in the range of 72 to 74. Key data points. FIIs continue to invest in the market, with December net purchases at 48,233 crores, which was the third successive positive month. However, DIIs were net sellers to the tune of 37,293 crores in December. Looking at the Nifty put call ratio, that is the PCR, which currently stands at 1.32, clearly indicates that there are more puts in the system than calls, but the number has come down, so it suggests a cautious approach. Looking at the maximum open interest, that is OI for the Nifty weekly expiry, is seen at 14,000 call option and also at 14,000 put option. Market outlook. Market will be driven next week by December quarterly earnings, with TCS reporting on 8 January, news flows with regard to vaccine, global cues and economic data points, wherein China's Caixin manufacturing PMI for December is due on Monday, Japan's consumer confidence for December, and US FOMC meeting minutes on Wednesday, US balance of trade for November on Thursday, and US non-farm payrolls data on Friday. These global key data points will be keenly watched by investors across the world. Apart from that, India's market manufacturing PMI for December will be released on Monday, and market services PMI data for December will be released on Wednesday. Technically speaking, overall, the uptrend for both Nifty and Bank Nifty remains positive, but bearish divergence is being seen on the daily charts, which is a sign of caution. Comparing Nifty and Bank Nifty's structure is weaker as compared to Nifty. Looking at support level for Nifty is around 13,700 and below at 13,400 levels, whereas resistance for Nifty is seen at around 14,150 and above that at 14,320 levels. Whereas Bank Nifty has support at 30,300 and below that at 29,500 levels, whereas resistance is seen at around 31,700 and above that at 32,100 levels. So this is it for the week. Wishing you once again a super year ahead and happy trading. I will be making videos both in English and Hindi. Please share your feedback, and if you like, please do subscribe. Also feel free to share your feedback. They are most welcome. Till we meet again. Thank you. Goodbye.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.